Hey, Mel. Yeah, so there is one Stargate investor you might not have recognized on the list when it came out, MGX. That is because a year ago, it didn't exist. This is an Abu Dhabi-based investment firm launched back in March as a joint venture between sovereign wealth funds out of the United Arab Emirates. The fund was carved out to focus on AI, and it has been in some of the hottest deals we've seen in Silicon Valley in the past year. OpenAI, Databricks, XAI, and then a $100 billion partnership back in September with BlackRock and GIP on AI infrastructure. The Emirates region has been on an investing tear lately, especially in AI. The Emirati sovereign funds, including MGX, spent almost $30 billion across 52 deals in the past year. That was the highest across the region, according to SWF, a research firm. It does highlight foreign demand overall to get into some of these deals, but especially in infrastructure. So these Middle Eastern countries, they're looking to diversify these oil-rich economies. And I've been talking to sources who work closely with MGX. They say the team is highly technical, and those who know the playbook and are familiar with it, they say the goal is for this fund to really learn about how to build these types of mega data centers in their own backyard, Mel.
Kate, is there any sense amongst the people that you talk to that there's a concern that there's a lot of foreign money being used to build the United States' major data centers infrastructure for AI?
It came up a lot, Mel, the national security question. I think the Emirates have warmed relations with the U.S. They are seen really as, among the sovereign funds, quite friendly to the U.S. And Jared Cohen at Goldman Sachs, I'm going to steal this term from him, he's called it geopolitical swing states. So especially those sovereign wealth funds in the Middle East, they have a binary choice when it comes to AI. They are either going to invest in the U.S. or in China. I'm told the bet here by the U.S., by the Trump administration, is that they would rather have that money here in the U.S., knowing that otherwise it might go to China. I'm also told in these infrastructure deals, they're not getting any sort of IP. It's not like they can go in and sort of take a picture of the data centers. They're getting the relationships. They're getting the sort of big picture know-how, but there are still strict IP.
Last year, Dan Ives of Wedbush Securities made several wise predictions. His forecast that the NASDAQ composite would hit 20,000 in 2024 as the surge in artificial intelligence drove technology companies higher was maybe the most stunning. Ives is still optimistic about 2025. Technological advancements in steam power, electricity, and microprocessors propelled the first three industrial revolutions, and according to Ives, artificial intelligence is what will propel the fourth. Such large-scale investment possibilities may only arise once every 10 years, or possibly less frequently. Crucially, Ives named Nvidia as his top stock pick for 2025 in a recent interview with Bloomberg because of the company's pivotal role in the artificial intelligence economy. When it comes to speeding up intricate data center processes like running artificial intelligence, AI applications, and training huge language models, NVIDIA graphics processing units, GPUs, are the industry standard. According to analysts, the chipmaker's market share for AI accelerators ranges from 70% to 95%. Furthermore, according to Forrester Research, modern AI would not be feasible without NVIDIA's GPUs. The market often underestimates how hard it is to compete with NVIDIA, according to a new note from Morgan Stanley's Joseph Moore. In fact, most analysts predict that the business will continue to dominate for at least 2 to 3 years. NVIDIA's CUDA platform, a strong ecosystem of code libraries and pre-trained models that makes creating AI applications easier, is one factor contributing to this confidence. The company's full-stack approach to accelerated computing is another factor contributing to that trust. Although GPUs are NVIDIA's most well-known product, the company also makes networking hardware, interconnects, and central processing units, CPUs. According to CEO Jensen Huang, the company is able to develop systems with a superior total cost of ownership because of this vertical integration. According to a recent article by Christopher Rowland of Susquehanna, NVIDIA has become the world's de facto enabler of AI. He credited vertical integration between semiconductors, related data center gear, and software for that achievement. It is more difficult to overcome that advantage than to create better accelerators. Rather, rivals would require a whole ecosystem of software and hardware that is similar to what NVIDIA provides. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Well, chip stocks today are a bit mixed. You can see that up there on your screen. Now, this comes after yesterday's rally following the news of the Stargate AI data center project announced by the Trump administration. Joining us now for the road ahead, not only for tech giants, but also for some of those chip makers, we want to bring in Rob Hayworth. He's U.S. Bank Asset Management Senior Vice President and Senior Investment Strategist of Wealth Management. Rob, let's just start right there with the tech trade. Obviously, the announcement yesterday adding to some of that risk-on excitement. Will it last?
In the long run, yes, we think it will, right? The challenge here is artificial intelligence is really still in its early stages of its investment boom. And this includes, in addition to just building the architecture itself, building out the energy needs and the energy supply needs to support this over the long run. So we think that this has a long road ahead of it. We may be a little ahead of ourselves in price. A lot depends upon what are the investments moving ahead. But we think there's room to run.
And what does that room to run then look like in terms of investor positioning? Where do you see the most opportunity for investors in specific names?
We don't really talk specific names, but obviously those that in the chip sector, right, have been early winners. We've seen some of the big technology names have significant investments. The next stage is really those income investments when it comes to the utility companies, because we really need that energy to start building out the data centers. And even though it's been a challenging couple of years here for real estate, right, data centers really are very important in this process, and there's more to come there. But then lastly, it will have to be the last mile, right? Ultimately, there are companies outside the tech industry, outside the utility industry, that have to benefit from this technology and make money from it. And so this is something we'll see that will start to work its way through the whole economy as we get to that last mile of who benefits from the usage of artificial intelligence, not just its production.
Yeah, I know you recommend a pro-growth strategy, and since you mentioned utilities, I want to jump on that. Does the utilities trade sort of become the next pro-growth tech-ish trade in 2025, given the focus on energy to fuel AI?
Probably not as much growth as we've seen out of the tech names, partly because it's such a regulated industry as we think about it overall. But given that interest rates have moved up so much, right, we think there's room for improvement here, especially for investors to gain some of that diversification, see some of that build out and benefit from some of that growth and demand, which remains significant by all estimations relative to our current electricity usage in this country.
The AI revolution is about to enter a new phase of growth, and Nvidia and Jensen remain at the forefront of this fourth industrial revolution, according to a recent post by Dan Ives on X, the website formerly known as Twitter. Additionally, Ives mentioned the Blackwell GPU and physical AI as two catalysts that might increase Nvidia's stock price in a recent interview. Nvidia's next-generation GPU architecture is called Blackwell. Blackwell can finish AI inference tasks up to 30 times faster and AI training tasks up to 4 times faster than the previous Hopper generation. The fourth quarter of fiscal 2025, which concludes in January 2025, saw the start of Blackwell's production ramp up. Thus, Nvidia should generate significant income from the new chip this year. The Blackwell architecture platform is expected to be the most successful product in our history, and possibly in the history of computers, according to CEO Jensen Huang. The next wave of AI is here, he also informed participants at the 2025 CES. Physical AI-powered robotics will transform entire sectors. As autonomous vehicles and robots grow into significant sectors over the next 10 years, Ives thinks Nvidia has a $1 trillion opportunity in physical AI. Crucially, Nvidia has already set itself up for long-term success. The business offers a full-stack computing solution for autonomous robots that includes embedded processors, software development tools, and data center infrastructure, similar to its approach with generative AI. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Estimated about $51 to $58 billion in spending. Mark Zuckerberg comes in $65 billion in capex spending. That's for 2025. George, your thoughts and your coverage of Meta platforms.
Well, I mean, I think, I guess in the traditional context, if there was a call for more capex spending, we would see typically stocks fall. But if you notice the environment we're in right now, it seems to be the opposite. I'm going to use Oracle as an example. Based on their expected capex spend, the stock jumped higher. So that might be the environment we're in. So irrespective of that additional 15 or so billion, roughly speaking now, increase in capex that Zuckerberg basically declared they're going to spend on that data center this year, the stock may just continue to the upside. Now, they're going to be reporting obviously next week in earnings, and this is a pivotal one. I mean, you're talking about the data center that's essentially a 2 gigawatt data center. He's got the map out the size of Manhattan in terms of square footage and the expense of that. And if you look at the capex of Meta platforms and Google and Amazon and Microsoft just in the last year, it's like $250 billion. I mean, these are huge numbers, but they're just going to continue to spend, particularly this year, because everyone wants to be first to market with their programs and artificial intelligence, and they're not waiting. And so
Dan Ives's choice of Nvidia as a top stock pick for 2025 is not unique. We are calling Nvidia our #1 large cap pick because of the company's leadership in AI accelerators and the impending release of the Blackwell architecture, according to a recent article by Harsh Kumar of Piper Sandler. Wall Street projects that through fiscal 2027, which concludes in January 2027, Nvidia's adjusted earnings would rise by 39% yearly. Because of this, the present price of 55 times adjusted earnings appears to be quite fair. However, according to Ives, the consensus projection understates earnings by up to 30% over the ensuing years. Regardless of whether he is right or not, investors who have 3 to 5 years to invest should feel at ease purchasing a tiny stake in Nvidia now. Investors shouldn't, however, focus only on one best AI stock. Building a basket of AI stocks that spans several sectors of the AI economy, like software, cloud services, and data center infrastructure, would be wiser. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.